Hello, family. This is Q with Mixherbs.com. And today's topic is about the housing market and how the housing market is shifting. And I'm going to talk to you a little about how you can take advantage of this new shift and what it means if you're a seller or and what it means if you're a buyer. So, we're going to dive deep into this. Subscribe to my channel, click on the notifications button, and we're going to get started and leave in the comments what you think about some of the things that I'm going to be addressing in reference to this housing market and this big shift that's going on. So, let me give you a little background. I was in the real estate, I was a real estate agent for 10 years, and I've sold quite a few homes in all types of markets within that 10-year period. It's been about 25 years now since I was actually doing the real estate. But I'm actually I keep up with all the details and everything that's going on as far as the mortgages and the interest rates and everything. And so in the time when I was doing the real estate and I was an agent and I was representing the sellers and buyers, mainly buyers. And as I was representing the buyers, I noticed, the down payments is an issue for a lot of buyers, and you have to find different type of loans that you will want to do if you need help with your down payment or anything like that. So, in this housing market we're in now, it's starting to shift. It used to be that it was a seller's market. But now it's shifting more to a buyer's market. And I'm going to tell you why that has become a shift, like going from a seller's market into a buyer's market. One thing you got to look at is the interest rate has been rising. So the interest rate is now at approximately about 6%, depending on your credit and your credit rating. That six you would be somewhere close to, a high 5 point something percent, 5.8%, or somewhere in the 6% range. And with those rising interest rates, and since the pandemic has passed, there's been a lot of houses now on the market. New builders is building houses and new houses on the market. And with that interest rate being as high as it is now, it has caused a lot of buyers to back out and a lot of houses being on the market. But with that being said, the housing prices, prices of the homes have gone down at least 10, 20%. I've seen some of the houses now that's been on the market 30, 40 days, and they done dropped it 20,000, 30,000, 40,000, and so on. So that actually ends up being a really, really big thing as far as if you're in the housing market looking to buy a home, and not so good for the seller. So as a buyer, since I represented a lot of buyers in my day, and I actually had property like four, well, at least three rental properties at one time, and I sold those and actually just have my primary residence. And now with that, when you actually, as a buyer, you're looking out and you're seeing all these properties, and you don't have to compete with a lot of other buyers as far as putting in what you would say your putting in an offer, and you have to compete with so many offers. I mean, I've seen, but during the pandemic time, I've seen where you had 10, 20, 30 offers on one property. I mean, how can you compete with that? I mean, it's like you got to pretty much give them everything they want, avoid appraisal, avoid inspection, everything, just to try to get this property. And that's nowhere to buy a home. But now the tables is turned. You can negotiate the deal that you want. But a lot of people with this interest rate is kind of nervous because that's going to make your note much higher. But you got a situation where you can either be in where the prices are high and the interest rates are low, or the interest rates is high and then your price of the house is lower. So, they kind of offset each other, but it's always good as a buyer to be in a market where you don't have to compete so hard against other buyers. And this is where we are now. So, what I would say, if you can get a loan, say if you can't get that 20% down, like some of the people who teach about finances and stuff like Dave Ramsey, they suggest that you put 20% down and do a 15-year loan, which is, in my opinion, one of the better ways to buy a home if you have the down payment and you want to decrease the amount of time that you have to pay on a loan. A 15-year loan with 20% down will work. But let's say you're not in that situation. Let's say that you don't have that much down to put down, and your credit, you're looking for a certain type of loan where your credit score is not really that high, or you have some kind of issue going on. Then you have to go to different type of loans. So most of the time you end up with a 30-year loan. So now Bank of America has this 100% loan where they would actually not even charge you private mortgage insurance. So a loan like that can work out where you put little to no money down and it's less than that 20%, and they giving you a deal where they actually don't even do the PMI. So that's a win-win in a situation like that if you looking to buy a home. And so loans like that will help out. And there's other lenders that would do 100% loans or 3% loans down, and where you don't have to do 20% and not do that PMI. You really don't want the PMI. You want to avoid that private mortgage insurance, whether you putting down 20%, 10%, 3%, or nothing down. Try to find a loan that you can avoid that PMI. So once you get that loan, then it's smooth sailing. You just go out, work that deal, and then even though you might have this higher interest rate for a time period, but you're getting your home at a lower price, because at some point the interest rate will come down. So once that interest rate comes down, then you can refinance and get that lower interest rate, and you had bought the house at a lower price. So with this housing shift coming, and it's pretty much already there if you're not watching, is that you can get this house that you want, make the deal that you want, because the volume of the homes is much, much higher, and it's a shift towards the buyer's market instead of a seller's market. And as a tip, I would say too, when you negotiating your deals for a particular home during this shift, make sure you always do the inspection. You don't want to bypass the inspection. Make sure that you can get the seller to do almost all of the repairs that are necessary. I mean, they got some that they have to do, and then others are like cosmetic. Even throw in some of the cosmetic things too, because with this you can always negotiate. Everything is up for negotiation. So try to get everything that you want as a buyer. I would suggest, on the appraisal, it's a win-win. Say even if appraisal come back under what you had offered, then most likely the seller would come down to the appraisal, because in order for them to sell it, they can't, the loan is not going to be above the appraisal value. And so that's in your favor too, because with this market, the seller is going to be most likely going to come down to whatever the appraised value is. But I believe now you can actually get it under appraised value, given the situation that the market is in. And not too sure how long the interest rate will remain at this 6%. It's probably going up a little bit, trying to slow down the inflation, because of the inflation rate. But at some point it will go back down, and then once that interest rate going back down, the price of the house is going to shoot back up, and everybody going to flood the market again. So as a buyer, I know the interest rate is high now, but you can get in and get the lower price of the home, get in, refinance once it get down, lower, and you'll be good to go. So there's just some tips and some information I wanted to share about what's going on with the housing market. If you have any questions, just let me know. Hit me in the comments. Let me know what you think, how everything's looking on your end. And I know some of the places that I've seen some drops in Las Vegas, seen some drops in Texas areas like San Antonio, DFW area. So, you know, it's plenty of places that you can go wherever city you're in and just check out on realtor.com or anything like that and see what the housing market doing in your area. And you will see that is more volume of houses and people dropping the prices with this interest rate being up. So that's all I got to share. This is Q. Peace.